Hey, everybody, welcome back to Trades and Gains. I'm your host, Max Pitts, and Wall Street just threw one of its biggest midweek parties of the year. Inflation tapped the brakes, big banks smashed earnings, and the Dow jumped nearly 700 points. Let's dive into why everyone's high fiving on trading floors and what this means for your money. So, first up, we have CPI data. Let's go down to our numbers. And headline inflation came in at 2.9% for December. It's still hot, but it's still manageable. The real win, core inflation dropped to 3.2%, ending a 4 month streak at 3.3%. Now, why does this matter exactly? Well, it gives the Federal Reserve breathing room, and investors are now betting on rate cuts sooner rather than later. The 10-year yield dropped to 4.66%, which is like a green light for stocks. Lower yields equals higher stock prices, especially for tech. Or as one trader put it, from meltdown to mild breeze in a single print, you gotta love it. Now let's talk about the big dogs. We had big banks that reported earnings today, and JP Morgan crushed it with record profits thanks to a deal-making comeback, and Jamie Dimon's basically doing victory laps at this point with his incoming retirement. Goldman Sachs was the same story, trading gains for days, and Wells Fargo, BlackRock, and BNY all posted strong quarters. No meltdown for big finance folk, as one trader said, financial stocks took off, dragging the Dow and S&P along for the ride. Now, for our big boys today, we had the Dow Jones, which jumped 1.6%, which was nearly 700 points. Who needs AI mania when we've got big bank blowouts? The NASDAQ was up 2.3% as tech stocks came roaring back. NVIDIA and Apple were the stars of the show today. And even IWM, aka the little guy, climbed 1.6%. A rising tide lifts all dingies, right? And on top of that, we had the S&P 500 with a strong day of a 1.7% finish, thanks to a chill CPI and a meltdown in rates. Now, let's talk rate cuts next. With inflation cooling, the market's suddenly optimistic that the Fed might cut rates earlier than expected. The odds of no rate cut by June just went pool. Or not pool, but just went poof. They essentially disappeared because I think it was 3% last time I checked the CME Fed Watch. But let's keep it real. One CPI report doesn't mean we're in the clear. Inflation is a tricky beast, and a second Trump presidency could bring tariff drama that reignites price pressures. For now, though, the markets are vibing and loving it. Bond yields also fell to 4.66%. And that's great news for growth stocks like semiconductors and streaming apps. Meanwhile, the dollar softened, giving more fuel to the rally. And the translation of this, lower yields plus a calmer dollar equals tech stocks moonwalking back into the spotlight. But can it last? That's the $1 million question everybody is currently trying to figure out. And then we had tariff tangos. Let's not forget about those whispers out of Washington. There's talk that Trump's team might roll out tariffs gradually instead of the dramatic boom, 60% tariffs that would spike inflation. A slow burn might actually help the Fed keep inflation under control, but nothing's set in stone yet. So here's our bottom line for the day, folks. We had inflation cool just enough to spark a rally. We had big banks are making bank and stocks partied like there's no tomorrow. But remember, this is just one report, one rally. Tariff rumors and Fed moves could flip the script fast. Until then, let's enjoy the good vibes. Don't forget to like, comment, and subscribe for more market updates that actually make sense and that you actually learn something from other than these bullshit media outlets. Anyways, have a good day. Happy Wednesday, and I'll see you all in the next one.